What's up, guys? What's up, man? This is my Sunday market breakdown. I'll explain my top six pairs for the week, right? With the pairs I have on my wildcards, right? So the first one is CAD Swiss franc, right? CAD Swiss franc is more in higher risk to say, right? The straight, but there is more neutral on this pair also, right? And I'll explain why, right? So let's go into it, right? First things first, we can see that the market has been moving sideways for quite some time. I would say from September 2025 till now, right? Sideways movement, we can see that within this sideways movement, the market is still trending, right? Still giving us trends, right? So this volume area on top here, right? This was the initial push of all this. So we see this volume here. We can also see where this inflection point over there. So I'll expand this inflection point. We can see there's a slight gap towards that. So it just gives me signs of there is liquidity towards the upside, right? So now we can see where the market is sitting. We can also see this value area over there. But now you see all this, one would see there's no trades within it, but I see trades within this, right? Also, we can see that there is a gap towards this area of value, right? So there's liquidity both to the upside and downside. We can see there's also this area over there, right? This one on the smaller time frame, it will all make sense, right? So we can see that the market with this area of value, the market tapped with a gap towards that gap got filled, right? But the market didn't really move towards the upside or reacted. Rather, it was just sitting, consolidating at this area, right? Uncertain of is the market going to sell or is the market going to go much more higher, right? As I am neutral on this pair, right? So meaning I see both buys and sells that can happen, right? But it's just how we position ourselves within all this, right? So we can see on the daily, right, how the daily candle closed with a bullish engulfing. But still, the market can give the next candle, then just can come down, and this is all a big sell, right? So let's go down to the H4. On the H4, we have this area over here, right? We have this high over there, right? So this high would have act as a double top this area for a continuation towards the downside, right? So but the market broke that impulsively and it's trading above this, right? So is the market going to go up? There is a chance it can go up 100%. We can also see with this big descending channel, right? As you guys know, descending channels usually reverses towards the upside. So we can see also this volume being built up, right? So how would we then trade this? Either if we get the H4 or H1 continuation above this area, above sitting at this, just to retest the back end of this high, right? Then I can say, okay, right, there is a chance the market can go higher. We can maybe take the first TP over there. We can go in with there's a 10 pop stop loss. We can also go maybe 15. I would go the highest on this one. Into this is almost 3%. Into this area 4, and obviously this high would be then 5%, right? The only problem I have with the buys is, right, you can see this impulse, right? The problem is I don't like impulse. It's only one candle. I don't like an impulse. It's just one big candle. Usually what tends to happen, it will usually retrace 50% or even retrace the whole candle before then going into a particular direction, right? So that is my scenario for the bulls. Now this would then act as a structural flip because of this structure over here, right? And then the market goes up. Another scenario is for the CLCs, whereby we have this, right? But we can also see we have this pattern over here, right? Possible continuation. We can also see there is also internal structure for a 1 to 3. Now this would act as a middle section, right? Act as a middle section. Now I won't be surprised if the market pushes back in, like I said, retrace this impulse, right? Then it gives a H1 or H4 continuation pattern. I would really want a 3 touch, would be a flat 3 touch, would be great here, right? To take ACL 100%, we can then take that maybe with a 13 15 pip stop loss above that, and then we can trigger maybe the first low over here is 2.5 into this low over here 5.8. So that is why I'm more neutral on this one. But if it breaks back in and we get a continuation, I believe this back and we can still get some sales. But above this area, if it forms bullish continuation, we are taking the bulls, right? So that's why I'm neutral. I'm just waiting for the market to really show its hand. Then we can act, right? So my next pair on my watch is EuroCAD, right? So EuroCAD also one of my favorites for the week. EuroCAD on the weekly, right? And on the daily, we can also see the market has been moving sideways, right? But we can also see the market then in uptrend still, right? 100% still in an uptrend. We can also see where the market is currently sitting. It's sitting at this inflection point over there, or hook point over there, right? So let me just quickly add this. We can see that, right? We can also see we have this 1 2 3 over there. We have this big channel happening over there, right? So we can see where the area is sitting at the inflection point, but we know the value area is over here, right? We can also take this area over here, right? So if we go down to the weekly, I do the daily, right? So we know where the market is sitting at the hook point, right? So we have to wait for the market, right? So I would then say we can mark off this high over there, right? Now we see the market pushed up, flag, but didn't really move. It moved from there, but it left us a clue. It left a gap towards that value area, right? We can also see this area over there, whereby the market reacted, right? So we saw the market tap into this area, slight break, pushed higher, right? Taking this volume right into this area, but the market didn't really move, right? So now we can see we have this internal structure. We can see there's a possible selling market over here for this internal structure. Now this is something I call patterns within patterns, right? We can see that the market, obviously we would want some bullish momentum, right? Because we can clearly see with the impulse, correction, continuation into that gap whereby we see there's liquidity towards the upside. We can also see where the market is coming from previously, right? So this is on the daily, right? So we would need some more confirmation also, right? Or more time to say there is confirmation of the daily, right? So now we can see the market over there, right? We can see this. This can also act as a middle section, like I said, with the bullish. This market's overall direction is still bullish, right? So with that being said, right, we can also see the market then giving us this double top over there, right? We can see the double top over there. We can also see how the market approached this area very correctively. We can also see that slight double top within a double top. We can see the clear impulse, right? So for me personally, I would rather say that let's wait for that H1 or H4 continuation, right? A 3 touch for me personally would be great. A 2 touch also, or V shape, but then we have to see how the market then reacts. So I would then go about this like this. If I can get a 3 touch continuation into that, maybe for 30 pips, 28 pips, this is 25 pips stop loss depending on the market. Into the first low over here, almost 6%, into this 7%. So now this acts as impulse, this would act as an impulse correction continuation, right? So we have that 1 2 3, whereby we can see those longs coming in that we see on the daily, right? So very clean structure here, patterns within patterns, very powerful. So yeah guys, that is my EuroCAD analysis. That is what I see on this pair, right? My next pair is Euro Aussie, right? So Euro Aussie, right? I am neutral on this one, and there's a reason for me being neutral, right? So as we can see, we have this value area over here. We see the market has been moving sideways, slight descending structure over here, right? So we can see we have this value area, but we can also see there's a gap towards this. The market filled the gap, nice slight break, it moved up aggressively, right? So we can see there's an impulse on the daily, 100%. Very good structure over there. We can also see we have this big descending structure, right? Let's quickly do this, guys. Right? So now we can see where the market is sitting. The market is sitting at this area of value. I would say there's also volume build up, and we can see the push towards the downside, right? Now the market just stepped and moved aggressively. We can see the sequence of everything here is very clean. We have that smaller continuations for the first run, which shows to me that this bullish run can be very clean, right? So all I'm waiting for the market is really just to give me that larger continuation. The reason I'm saying this because we see this footprint sitting over there. So the market can snap back into that or tap into that footprint, right? So let's say for instance it does this, a 3 touch over there. I would believe this would be a nice bullish run into this eye, of course, right? Into this eye, and then we can take this as a risk entry over there. Also maybe retesting the back end of this. As you can see, it plays in along that line over there, right? Whereby we can then get an entry. Excuse me for the rough analysis, guys, but you guys understand what I'm trying to say. And then we can take it into this eye over there, 3 to 4, and into this eye of course for 6 to 8, right? So we can see that as a clear impulse correction. One would also then say we would see an inverse head and shoulder. That is also a confluence, right? When it comes to this pair, right? So that is what we can see, what we can get from this pair, right? But there is also this scenario, right? And I'll go back to the daily, right? Whereby we have this area over there. Same thing happened previously, right? But I won't just adjust it right now for now. We can see that we have this structure over there, whereby it tapped into that, market pushed down, we have the hook point, V shape, it sold off, failed structure, the market then tapped again, moved off, didn't commit, tagged the same high, didn't commit, it tagged again the area. So we can see this is just build up volume for me personally. The market moved aggressively. Fine. So I won't be surprised when everyone will be looking for the buys, right? But this is just volume build up. Then the market snips back to this area, right? Pushes down, gives a continuation, a bear flag continuation, and this goes. Now let's say this goes, it can still tap into this and go higher. Tap into this footprint as I said, and then we have this channel over there, and this acts as a double bottom and the market continue going higher, right? So that is also on the cards, right? Don't forget it, right? We can also see the market in tapping, pushing back down. At least somewhere in this area we can see this. If this forms a 3 touch continuation, I can 100% take this into this, right, for 6%, because now volume was built up here and it will be triggered over here, right? So that's me on Euro NZD, right? I am neutral on that one, more on the higher side, right? My next play is Pound Cat, right? Pound Cat also one of my favorites for the week. As we can see, the market obviously sideways moving, right? Sideways, just been moving sideways. We can see we have this value area over there. We see we have a gap towards that, right? So we can also see, we just look at this, we have a first touch, second touch, that third touch aligns with it. So this trend line is a valid trend line, right? We can also see something like this for the third touch. Now we see the structure over there. We can also see where this double top. Now the key here for me, what I like about this trade is, we can see this area value. It pushed down, gave a flag, but the flag didn't commit, right? Failed bearish continuation. This was a failed structure. The market dipped, left the gap towards that area, moved down, taking into this area, moved up, filled the gap, right? Grabbed liquidity. Look how the daily closed. Very, very clean. So with me personally, with that daily candle, it's so clean, right? We can also see, just quickly mark on the gap over there to indicate that. We can also see a small, that arc formation, right? It arc over there. So we see the impulse. So I just really want to see some kind, let it tap into this area, and then maybe if it gives a two-touch continuation, sells off. Let's say you missed the first continuation over there. It's fine. This is also much more and higher risk, right? So if it forms a continuation, a small continuation underneath all this, underneath this low, maybe retesting the back end of this, we can 100% take this over there into this low over there. Would be a 4%. Let's say we have something like this into this, whereby 6%, right? So we can see the market then giving us that sales, right? But also be aware that the market can then take this area, push it up, give a flag, and this goes up. And now this was the volume. Voila, market came back, tapped this volume. This is a impulse correction continuation. So be aware of that, right? But for most and foremost, I would say this pair, I would look for sales 100%. Let's say we have a 3 touch over there, something like this, 45 pip stop loss. Now the big question is, would you take a 15-minute structure there? I would not. I would rather take a H4, 2 touch, 3 touch continuation, or H1, right? I would then take that, right? So that's my analysis on pound CAD, right? So pound SU is also one of my favorites for the week. I just love how this pair naturally is very, very corrective. Don't get me wrong, very, very corrective. But we can see from here, right? Where this value area over there, we can see there's a gap there, right? We see there's a gap, so obviously we see liquidity to the upside, right? We can also see, we can take this value area over there. So now we can see this impulse, correction, continuation, right? Very, very important. We can also see the market and tap this area, right? Tap back into this area. Market moved up, gave a correction, and then moved up again. So if we go to the H4, now here's where the tricky part comes, right? We can see that we have this, right? This first touch, second touch. So if you see the market then selling down, is a risk entry good to take? Yes, it's good to take, but it is more on the higher risk side. The reason why it's because of this footprint over there. It's not a cleanse on the H4, but we can see the market pushed up, then we had this footprint, the market sold. I went up, came back, right? So this area was the initial push of this first impulse, right? So we can get that the market then maybe slightly breaks, taps into this area, then pushes up and gives a flag, and then we can go higher, 100%. So with this one slightly on the, it is not slightly, it is on the higher side, right? But the bullish momentum I see, I would take buys on this. I wouldn't take so much on the sales because I'm forecasting for buys, right? Just quickly adjust this over there. So we can see that, right? So I would say if something then slight break pushes up and we get that flag over there, I would then say we can take this into this. Obviously we would say 30 pip stop loss the highest, maybe 25 even 20. It depends how the structure is, right? Into this high, obviously if it breaks this high, we can then see it filling that gap over there which I talked about on the daily to then go higher. And as I said, then we see the big move as an impulse, correction, continuation, right? So that is pound Swiss. My next pair also, I think this one is one of my favorites for the week, is USD Swiss franc, right? USD Swiss franc, very clean pair for me personally, very clean. I will show you guys why I'm saying this, right? So with this pair, right, we can take this value, let's take this area over there. So now we can see the market has been moving towards the downside, but we can see something changed over here, right? So what I see is, I see this market then forming a ascending channel leading up into this value area. We can also take this and maybe just go to the nearest one to this volume and it aligns better, right? And so now we can say we're looking for the third touch. Now I would say this is an impulse, correction, continuation. This would act as a middle section of the structure, right? 100%. So if I go to the H4, but before I go to the H4, look at the daily. The daily, I would say we can see that the market did break that area, right? Where this high over there, right? So we can see the market sold off from here, right? It did take this area, but look at that area. It took the area, right? This area, but there was a weak. So usually liquidity, right? The market pushed down. Look at this flag. Usually if you see an impulse and the correction is almost the same length as the impulse, usually the market then changes direction. We can see that this correction is bigger than the impulse, right? Also with the DXY going towards the upside, this also plays in our favor, right? So let's just adjust this. You can use this as a reference point, this high, or you can use this, doesn't matter, right? Just want to see how the market then develops, right? So what I would like from this fig, clearly, I would just want to see a continuation pattern retesting the back end of this high or even this high, one of those two areas, and then I can say this is good to take into this high over the first high, maybe as a TP target, 30 pip stop loss, maybe even lower smaller stop loss. It depends if it forms a H4 3 touch continuation or a H1, but I want a 3 touch continuation, preferably maybe a flat continuation to then go towards the upside, right? To then take into that over there. So yeah, that is my top 6 for the week. Patience is key, guys. Also on my watch, I'm on my wildcards, I have Euro AUD, right? So with Euro AUD is more on the higher side, and I'll explain why, right? We saw the market then tapping this area, right? But really didn't give any bulls, right? But then we can see if we can tap into this area, we have that 3 touch, this X as a middle section, the market pushes down, flag. I think this is great to take into this low, 100%. But there is also that scenario of the market then doing the opposite, right? You can see it taking this area. Now let's say the market then does this. The market pushes towards the upside and then forms a continuation. We can see taking into this area, because if we go to the H4, I do the daily, you would then see that the market tapped into this area. Now I'll explain why this area is important. It's because this move started from here market tap into this. Now we have a double bottom on the daily time frame. We can also see there's a big impulse. Yes, the market is selling, but we see we have a possible larger continuation. If I zoom out, you would understand what I am saying. We can also see the market then taking this area whereby we see the market sold off continuation. We can also see a clear channel over there, reversal channel, right? So we are trading within a correction, but the beautiful thing about this strategy is with this daily range is so large that we can trade within this range, right? So that's euro AUD on my wildcards, right? So yeah, the next one is NZD JPY, right? So we can clearly see me and my team took sales. We took capitalized on this move last week. Me and my team, beautiful trade, textbook trade, right? But with the fundamentals that from last week, right? This week also fundamentals. I would really want the market to form this pattern, form a continuation. All the stop losses here, trigger them out, tap, snap back into this footprint, push down, flag, and then we enter again. 100%. That is how I would go about NZD JPY. The next one is Euro USD. Euro USD, I'm looking for longs around this area. So we can see there's a gap towards this, liquidity towards the downside. You can also see we have been trading into this volume. We have this V-shape continuation. We have this impulse correction continuation. Formed another impulse. You can see last week's NFP sold towards the downside, as we also saw DXY moving towards the upside. So the same way we seen buys on DXY, the same way we can see sells on this one. So I want to see some kind of continuation, even if it's a 2-touch or 3-touch, but I would really want a H1 or H4. If it's H4, I would say a 2-touch. If maybe it's H1, I would say a 3-touch continuation, maybe retesting the back end of this, and then we can take sales. Guys, this is my watch list for the week. Wishing you guys a profitable week and a blessed week, guys. Never forget, follow the plan, trade the plan also, guys. Plan the trade, and then you trade the plan, guys. So wonderful evening. Thank you, guys. See you soon.